Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 1st, 2019. First of all, hit the like button and subscribe to this channel. Now, if you're a regular listener, then you know that last week I promised that we are going to start an Indiegogo campaign. Now, everybody came down with the flu, so the team had the flu. We have the good news, we have a team, and you will hear about it very shortly, but unfortunately they did not start this week, so we're going to have to push it a little bit, hopefully towards next week, and then we will get it rolling. Now, if you want to sign up for these deals that are coming for the Indiegogo, please subscribe on MasterChartsTrading.com. Alright, so we'll look at stocks which have seem to have shrugged off the December 2018 drop. We'll look at Dow Jones and S&P as they clear very important resistance levels. Europe, Japan, emerging markets also look promising. High yield junk bonds are helpful to the stocks. We'll look at more conservative bonds. We'll look also at dollar and gold relationship, and finally finish with a picture-perfect natural gas trade. Alright, so let's look at S&P 500 first. Here is S&P 500 ETF SPY, or rather S&P 500 futures, ES1 exclamation point, right there where I'm hovering on TradingView. On this chart you can see this green, blue, red and yellow horizontal lines. These are indicators which can be applied to any chart, and you can find out more about the indicators here on MasterCharts Trading. So what I use, these are my own indicators, I programmed them in. See here what we had in December of this year. We basically had a what I thought was a bearish breakdown with a huge follow-through. Now what appears to be is happening is that we see a V-shaped reversal. So we can see a big drop and a rise towards new levels, possible new highs. I mean, new highs are not that far off. They're about 29.40 or so. So we could easily get there, especially if this breakout that I'm looking at right now, this breakout on the 31st of January is indeed true, because you can see that right there on the 31st of January we see a price closed above the blue indicator line, and in my book this means that we are now again in a bull market. The same can be said about Dow Jones Industrial Average. In fact, it is a little bit stronger. You can see nice closes here above the blue, and even here on Friday also we see a close here. So this looks like the stocks have indeed cleared resistance and most likely will continue higher. This is the reason why I just don't really like to sell or short stocks. Notice here on the 8th of January of this year, I did not send any alerts to my subscribers, and neither did I enter any short trades. For S&P 500 it's the same thing. You can see the price came up to this red line. There was no bearish price action. In other words, we need to see like a touch of the red line and then a close below it, something along the lines of what I'm hovering over right now. This did not occur, so I just did nothing, and now I see a breakout, so I'm going to take it at face value. At face value this looks like a breakout, and we should continue higher from here. Again, Dow Jones here, so this is looking like it's a bullish chart now. Junk bonds also very important. Notice the way these indicators are curving down here, and it's one of my favorite type of trades where the price is coming up towards the indicator lines, but the indicator lines themselves are coming down. So in essence, what's happening is the price doesn't need to travel that far towards bullish levels, and this is what we basically are doing. We're looking for a close above this blue line. You can find out more about it at MasterCharts Trading, and then we're simply buying here. So junk bonds, since they correlate very highly to the general stock market, this should be taken very seriously, because a breakout in junk bonds is a good sign for stocks as well, because of the correlations. In other words, the stocks and bonds, stocks and junk bonds, stocks and high yield bonds, they move together in lockstep. In other words, if one goes up, the other one goes up, usually, and one goes down, the other one goes down, usually. So again, this is a positive sign, constructive sign for the general stock market. Some of the foreign markets here is the European VGK. Again, notice just the way these indicators are curving down. I mean, I absolutely love this type of patterns, and you can see the prices coming up. So if when we get here to this blue line, I would be considering buying it. And this is Europe, so European equities perhaps also have bottomed. We'll see. Same goes for Japan. Notice the way the indicator lines are curving down while the price is actually moving towards them. So very little now distance between the actual price and the bullish price level. So for this particular ETF, the Japanese unhedged ETF, a good breakout level to watch currently is 57.42. Same goes for emerging market. Notice how the indicators are curving down, prices continuing higher, so we're approaching this breakout level, which is at 45.45 currently. And I have no problem. I'm not married to downside or upside. I'm just looking at the markets objectively. If the price is going to continue higher, I have no problem jumping on the bandwagon and just starting buying again. The bonds. So these are short-term bonds, BSV. You can see that it was a similar pattern. You can see that the indicators were curving downwards, coming down, and the price was moving higher. And here is the actual alert to my subscribers on the 31st of December. Obviously, it's already resulted in a nice gain, but you can see that we pulled back a little bit. Overall, this is still an uptrending security, and I would consider buying it from, continue buying it. But at least I can see that the bonds are dropping a little bit, and this is possibly, or rather, this is an indication that the stocks are perhaps have bottomed, because stocks and bonds usually move in the opposite directions. And if the bonds are dropping, that means that perhaps the fear has passed, more or less. TLT, I have a position myself. I opened at 121.07 here in the middle of January, approaching my target levels. I mean, this is still a bullish chart, and I would still consider buying this chart. I would not be selling this. I would not be shorting this chart yet. So again, sometimes bonds and stocks move together. But vast majority of the time, treasuries, specifically TLT treasuries, and stock markets move in the opposite directions. But there are episodes during the market history when the stocks and treasuries have indeed moved together in the same direction. So we'll need to keep an open mind about this. For now, I'm buying treasuries. Let's continue to the dollar and the gold. So this is DXY dollar index. You can pretty much see that this is a bullish security because these are fresh highs from November here. Now, I kind of was wondering about the dollar, and I'll show you gold in a little while. The reason why I was wondering about the dollar is because of the behavior of gold, and I think gold seems to be correct. Additionally, notice how the indicators are curving upwards. So what does that mean? That means that the price has less distance to travel towards bearish levels. And bearish levels for dollar index, this particular security, is at 92.23. So we will keep an open mind again. Perhaps we are seeing a reversal. The reason why I think we're maybe seeing a reversal is because of gold versus the dollar. Here's XAU USD. Now this is an actual alert to my subscribers on January 3rd here, and you can see a very nice gain already. We're also trading GDX, and we're also trading GLD and a bunch of gold miners as well. So we are getting into gold trading again, because it seems like gold has reversed, and I think it might continue higher from here. So as a result of this behavior, I'm very reluctant to be long United States dollar. And later on, once my trades are complete, I'll actually post them here in the next videos or so, future videos. Okay, and let me wrap up today with a natural gas trade, which recently I sent to my subscribers. In fact, let me show you the DGAS. Actually, myself entered, and you can see that I sold prematurely because I entered 72.50, sold half at 84.13, and then closed the position at about 76. So I made a very nice profit, but notice how it continued higher from here. So overall, you could make already a very nice profit, around 44%. But let's look at the actual natural gas trade, and this is what happened. This is my thinking. So for Forex and continuous commodities, I usually use the red and the blue lines as my trend setters. So once this breakdown occurred here on the 28th of December 2018, right there, this close below the red line, and again you can find out more about it at MasterCharts Trading, was all I needed to know to change my thinking that this particular security should be traded on the downside. And actually, in fact, we sent an alert right there on 28th of December for a pretty decent gain. But the even bigger one, of course, happened just recently on the 16th of January here. I sent an alert. Some of my subscribers took the DGS position, and they are very happy, obviously, because it went in our favor right away. So pretty simple, straightforward. You can find out how to trade using my indicators at MasterCharts Trading. So sign up by going to MasterCharts Trading and sign up for one of the plans here. Once you sign up, I will share these indicators with you on on TradingView, and it's very simple. Again, all you need to do is send me your user ID. Once you have it, I don't need your password, I just need your user ID, and I can share these indicators with you, the short and the long MasterCharts Trading indicators. Okay, so again, stay tuned for the Indiegogo campaign, which is hopefully happening very soon. Please sign up for our mailing list, and also do like this video and share it with others. Again, thanks for watching, and have another great trading week. Bye-bye.